Good morning, everyone. Thank you for joining our webinar today. As you all well know, we've been producing what we refer to as the BE Economic Survey for the last 16 years. We called it the Annual Transformation in South African Asset Management Survey. It's been a very relevant piece of information for the sector and all stakeholders in the sector because it provides valuable data and information measuring the pace of transformation in our asset management sector. We know that the asset management sector is a very critical role in channeling the savings of the people of our country, and therefore a sustainable sector was critically important. And so diversity, equity, and inclusion with this sector was paramount. So creating awareness around a transformation, but also creating an environment and establishing an asset manager development program was a two-pronged approach that 274 followed 17 years ago when we established both the survey and an asset manager development program, which has contributed phenomenally to the success of the industry. So in response to the kind of bleak number of Black participation and women participation in the industry, we launched the survey and both the asset manager development program as well. And the rest was history. There were requirements in terms of the participation in the survey. You needed to be majority Black owned, managed and controlled. You needed to have a certain number of Black decision makers, particularly on the portfolio management side, as well as in leadership positions across the business. And from a very, very modest start of around 91 billion rands in AUM and 14 managers when we started the survey in 2009, that eventually progressed to around 51 managers in 2020, and in 2023 we had a staggering 68 asset managers participating in that survey, representing 2.2 trillion rands in assets. And given that 2024 represents 30 years of democracy, it's a significant milestone in our history. We decided to reflect on what we've been doing for the past number of years, and also take a very close look at the overall industry to understand the relevance of some of the work that we were doing and to reshape that work so that we could be well positioned for the future, as well as be able to represent the sector more diversely. We kind of looked at things, and first and foremost, when we look at the BE codes, I think they're a bit outdated, but I do think that the BE codes were established at a time that was very different to the time we are in now, and it does require a complete overhaul. The landscape has changed significantly. The issues at play are very different to the issues that were at play 30 years ago. And so from our perspective, we wanted to introduce a framework that made sense. And that's one of the primary reasons why we established and worked on what we refer to now as our DEI index, because it's much broader. It represents the entire asset management industry. So we removed all the kind of restrictions for participation in the survey. And so everyone is welcome to participate as long as you're a regulated entity with the Financial Sector Conduct Authority as a discretionary asset management firm. So there's no longer any restrictions in terms of BBBE credentials. Secondly, the index is much broader. It doesn't only focus on Black ownership and representation. We look at a much broader range of issues that are impacting the industry, such as gender equity, sexual discrimination, policies on the advancement of people within the industry, more governance-related issues, and we'll touch on the index in a lot more detail a little bit later. So essentially, this new publication of ours is not only focusing on diversity, equity, and inclusion, it's also focusing on important data regarding the current positioning of the overall asset management industry, as well as trends that is influencing the industry as we stand from a regulatory perspective, from a participation perspective, from a national perspective. And so this publication provides you with all of that in one piece of one basically document. So what I'm going to do now is this concept of DEI. A lot of people are struggling with it. You know, they're very familiar with BEE. And so where does DEI come from? Someone said to me, what's this new survey that you're publishing last week? So I just want to talk to you a little bit more about this umbrella that we refer to as DEInvest, and what does it actually mean for South Africa from a return of capital, a return on investment and impact, because we like talking about both. We're at a point in the country where economic growth and job creation and all the other good things is required, and we can't achieve a lot of the ambitions that we have when it comes to transformation without economic growth. And DEI refers to diversity, equity, and inclusion. So what we refer to as research, partnerships, and development under this banner of DEInvest. On the research side, as you know, we've been producing research on the subject for the past 17 years, and will continue to do that. And we've continuously advanced and evolved the quality of that research as the dynamics within the sector continuously changes. And I'll share with you what we've updated on our research front. And all of our research is available on our website as well as on our social media platforms. So you'll be able to easily access any kind of reports that we do. Anything related to DEI is easily accessible and publicly available. On the partnership side, we extend our understanding of what transformation and DEI is, and we refer to that as partnerships in how we can achieve broader impact in South Africa and perhaps the African continent through partnerships and collaborative efforts in the industry, and we'll talk a little bit about that. And then lastly, on the development side, creating a competitive and functional and dynamic asset management industry where you want to be part of this industry, where we are able to add value to the people whose money we are custodians of, where we are able to bring in innovation, where we are able to drive a competitive landscape, is really all about the development part. So quickly then moving on the research side, on a monthly basis, we produce our monthly survey that focuses on Black-owned managed controlled asset managers across the different asset classes, and that is well utilized across the sector. This year, we're proud to announce that we launched a survey that primarily focuses on women-led asset managers, and this really speaks to the gender lens that we're looking at things when we look at the data and stats, the participation of women across the industry when it comes to senior decision-making roles within the executive as well as in portfolio management roles is very poor. And so for that reason, we want to do exactly what we did 17 years ago, start by producing tangible data and statistics and information and awareness so that asset owners and asset allocators can make informed decisions. But if they know who's out there and who's playing out there, it makes it a lot easier for them to understand the landscape. And then lastly, on the research side is our annual now publication of the DEI index, which is a fantastic benchmark to allow you to benchmark yourself relative to your peers, but also to allow asset owners to identify asset managers who are doing exceptionally well on the DEI front. I'm going to move onto the survey findings, which I think everyone is waiting patiently to find out the detail around the survey and what we have identified. So first of all, we had a fantastic response to our call for participation. We had a total of 93 asset management firms responding to that call for participation, representing a total of 8.4 trillion rands of assets. And next year, perhaps we should ask the Public Investment Corporation to also participate in the survey, which will push the AUM all the way above the 10 trillion rand mark. The top 20 asset managers, which is listed on your screen, represents a total of 92% of the industry's AUM. And with the merger of 91, or the acquisition or the cross shareholding transaction that is taking place, we're going to have a conglomerate sitting there, probably in the region of around 4 trillion rands of assets, going to represent close to 40% of the overall AUM of the South African asset management industry. So all 93 asset managers are listed in the survey, and you can go through and have a look at them. What's very important is the job numbers, where they rank from a BE perspective, as well as what Rory will speak to later on, an increasing amount of listed public markets focused asset managers are now venturing into the private market space, where 40% of our overall participants now have a private markets offering within their businesses. What do I mean by that? So we can look at it further, is that 90 so just coming back to the AUM, of the 8.4 trillion rands, currently 90% of that overall AUM is sitting in public markets across domestic and global public markets. 4% is sitting in private markets, and some asset managers refer to other as 6%. So I don't exactly know what they classify as other, but it may be some form of a hybrid of public and private markets, or more of a private markets investment that they've referred to as other. We are beginning to see the growth in the private market space, particularly following the GNU and the successful elections that we held in May this year, and talks around more infrastructure growth, triple P partnerships, as well as the establishment of patient capital vehicles through the regulatory environment to make it easier for asset owners to invest in regulated patient capital vehicles. So we're going to see a lot of growth and development on that front, which kind of speaks a little bit to why we have seen a jump in the number of participants in the private market space. When we talk about the listed market space, majority of the assets are in active equity, both locally and internationally, as well as multi-asset class funds and fixed income portfolios, which speaks again to South Africa is always focused largely on Regulation 28 compliant funds, which are multi-asset class portfolios, which speaks to compulsory savings, exchange controls, prescriptive limits, all of those things, which kind of justifies why so much money is in multi-asset class portfolios. But what we are beginning to see is that there's a bigger take-up in the passive and smart beta space, and those numbers are creeping up and beginning to grow, which is positive because you need an environment that is well diversified from a strategy perspective, to ensure that clients are getting the best of both passive and active investment strategies. From an overall staff perspective, what you do find, and this is where we've done a lot of work around representation and the composition of decision-making positions within executive teams, within decision-making teams on the portfolio management side. The industry is not a massive employer of people like, for example, the banking and the insurance sector. However, it does employ 6,500 people. Again, I want to stress that our representation in terms of the overall industry is very, very strong, because we've got all the large players as well as the mid-tier players and the smaller players. So this data is very well representative of the overall industry. What is promising is that 53% of the overall workforce are women, which is in alignment with the overall population of women in South Africa, which, according to the most recent census data, sits at around 51%. So you would think that women would form the bulk of the staff within the different components. Yes, that is true, but that's largely true within the support staff and within the analyst position and not within the portfolio management role. So we've got a lot of work to do there. And what we did find in the evaluation of over 350 policies that we requested asset managers to upload for the creation of the index, we did find that asset managers score in general very poorly when it comes to career advancement policies and whether they have clear trajectory for women in those businesses to grow and to develop, as opposed to poaching from one firm to the other firm. So that data we found was quite interesting. And given that we've got 17 years of granular data around this very specific issue, it's quite useful to look at that data because you can understand where some of the bottlenecks lie. Just from an overall industry perspective, we've seen a lot of big players come to the market. We again, based on this announcement, we heard Hendrik de Tooy talk about it on the radio last night, in the Business Day this morning. So there's a lot of offshore players coming into our market. What does that actually mean? And at the same time, are a lot of the offshore players with their partnerships with South African firms, are they investing in South Africa from their other portfolios, or is it just South African money that's going to fill the coffers of offshore funds and portfolios globally? So we just need to make sure that these partnerships are generating economic growth, and that those asset managers partnering internationally with our domestic asset managers are contributing to the growth of the domestic economy. From a client-based perspective, predominantly South Africa, Sub-Saharan Africa, and parts of Europe, and that's largely from the bigger players like 91, like the Sanlams and the Old Mutuals and the Coronations, who have got those offshore clients. We speak a little bit about the various kind of regulatory aspects of our sector, the growth and the development of the actively managed ETF space. We think that that's going to be a massive, is facing a massive growth trajectory. We know that there's a backlog of funds waiting to list on the JSE. We know that with daily pricing, with daily market making, with full transparency and disclosure of underlying holdings, as opposed to the traditional, because actively managed ETFs are CISs CISs from a regulatory perspective, but CISs currently only provide transparency and disclosure every 3 months. So from that perspective, investors can't see what the portfolio managers are holding. So we like where this actively managed ETF market is going. It's much cheaper. It makes it more efficient. And with some of the big firms going that way, we think that we're going to see an increase trend. Rory will speak to the private market space and the fee. That is the only industry that competes on higher fee structures, together with some of the other alternative investment sectors like hedge funds, etc. But generally, for actively managed and passively managed mandates within the public market space, you find that fees are generally fairly standard. And then lastly, I want to stress to asset management firms, to the regulator, to all stakeholders, asset owners who are on this call today. Cyber risk is a huge issue in our industry. In fact, cyber risk has increased by 48% in the last year. And it was very disappointing to see the level of cyber risk cover held by asset managers, big and small. And that's very, very worrying. I know that it's a regulatory requirement to have professional indemnity insurance, but I really would reach out to the regulator and say that it should become a regulatory requirement to have cyber risk insurance as well. We were disappointed to see the quality of the cover across the board, and this is something that asset owners and allocators should pick up, as well as the mitigating processes that asset managers put in place to ensure that this does not impact their client base. So on that note, I'm going to hand over to Rory, who will speak around the private market section, and I will come back to talk about the DEI index. So if I can hand over to Rory.
Thanks, Fatima. Sorry, my video is taking a second to come on. There we go. Thank you for that introduction, and good morning, everyone. So you've heard that, you heard the overall stats from Fatima about the general growth in the industry and the growth of private markets specifically. I think we've found this evolution very interesting. There's definitely been a maturing that's been happening in the private market space over recent years. And particularly, over the 7 years, the last 7 years where we've been running incubation programs for Black fund managers in the private market space, we've seen a huge shift. We've seen a real improvement in quality of fund managers in the space, improvement in processes, improvement in the quality of staff that are attracted into the space, and it's becoming a much more investable space for institutions. And you can see that in the conversation that's being held at the institutional level, the fact that private markets is on the agenda across the board in the retirement fund industry, and the increased allocations that are coming, both into private equity, but also into infrastructure, and increasingly venture capital is also coming onto the table in those conversations. And we've had submissions and participants from players who act across all of those areas. I think what was very interesting to see was where the emphasis is in the private market space. So by far, probably the most frequently traded areas, so the most actively traded area in the private market space is the mid-market private equity. So this is mid-sized companies, not large companies on the scale of what you get in the listed space, or even just at the lower end of the listed space. This is more kind of companies mostly with a value of under R1 billion. That's where most of the activity in the private equity space is. And then secondly, the area of infrastructure is a very important part of the private equity or private markets landscape. And we actually see the most money going into that space, but in much more concentrated investments. So these typically are very large deals, and there's typically large structures, large investment structures behind the infrastructure space. So they tend to raise much larger funds to invest in infrastructure than you would get in the mid-market private equity space, as an example. And I mentioned venture capital. You typically see much smaller funds working in the venture capital space. And what we really would like to see is the retirement fund industry starting to get a better sense of what's happening in that space, because there are very interesting opportunities. But I think for the challenge for the retirement fund sector is to see how do you do it in a way that manages the risk and doesn't unnecessarily expose the fund, while still getting access to some of those very exciting earlier stage opportunities. What was also quite interesting to see was the amount of money being raised currently. So you can see on the slide that around 80 billion rand was raised by the respondents to the survey since 2010. And when we asked the respondents what they're currently raising for their current funds, it's again another 80 billion. So you can see that the industry is growing, and that there's a lot of progress being made as the industry matures. So what comes with that increase in capital being raised is the kind of progression of the life cycle. So for anyone not too familiar with the private market space, they tend to be fixed life funds of around 10 years, uh, maybe a little longer for infrastructure and sometimes for venture capital. But 10 years is a good working assumption, which means that from the point where capital is raised, it takes around 5 years to deploy money normally. Um, and then there's a harvesting period after that. So given the capital that's been raised over the period since 2010, what we're seeing is a lot of fund managers have gone through that first investment cycle of their first funds, and on average, the respondents to the survey were actually managing their second fund or later. Um, and hardly anyone was in that boat of still raising their first fund in our respondent group. And I think this is indicative of the progress that's been made, again, particularly over the last 5 years or so, uh, in deals actually happening and exits starting to be achieved. So you can see there in the bottom right, we've got some stats on how the participants in the survey were actually faring from a deal activity and an exit perspective as well. And what you can see is that 3/4 of the respondents have done at least 5 deals. So that means they probably 3/4 are at least over the kind of the bulk of their deployment of first funds or later. And that almost half of the respondents have completed at least 10 deals. So that makes the industry a lot more mature than it was a few years ago, and this should be comforting from an institutional allocation perspective. And when obviously the exits come later, so there may be holding periods from sort of 4 to 8 years, sometimes shorter or longer in the odd instance. But so there's a lag between the time when investments are made and then when exits start to happen. But still, around over 30% of the managers that responded to the survey had done at least 5 exits. So, by that stage, there's starting to be developed a good methodology and a good process around the way that exits are achieved. And the managers who have gone through that process are a lot more experienced than they were a few years ago in making sure that exits are achieved and the returns that have been generated are actually being crystallized. So lastly, when we think about the flavor of the survey, which was around diversity, we wanted to look at both the racial and the gender diversity that sits in the private market space. Fatima mentioned, the progress that's been made from a racial perspective over quite a long period of time. And I think some of the legislation that we've had in the BEE codes, specifically around private equity funds and what is a Black private equity fund, has been very helpful in developing the space. That clarity that's been there from the regulator has actually really been one of the success stories, I would say, in the BEE legislation, in that it made it extremely clear how private equity funds should be set up in order to meet the BEE requirements, and the market firmly adopted all of those requirements. And so what that's meant is that it really encouraged, first of all, new Black private equity funds to come into the space. And then secondly, it also encouraged existing teams to transform and to bring in Black individuals into their teams. And what you can see here is the fact that far and away the biggest demographic now in the private market space is African males. And so from a racial perspective, there's been a lot of change. I think what you can also see from this slide is that for every racial demographic, there's a lower proportion that goes to women. Or there's a lower proportion of women that are employed for every racial group that there is. And the point that Fatima mentioned earlier around where people are employed, where different genders are employed in firms, is also mirrored in the private market space. So we see a lot of women in supporting roles, in business development, in administration, and the lower levels of the investment teams. But at the upper levels of the investment teams and CEO roles, you see far fewer women. In the CFO role, you do see more women taking on that role within private equity firms. But when it comes to the key investment roles, there are far fewer women that are making partner level in particular. So whether this is a matter of time for change, we'll wait and see, and we'll continue to report back. But the numbers are very clear at this stage that all the women in this chart are shown on. Every time you're looking at a female group, the numbers are just lower than the corresponding male racial group. So that's really all I wanted to say today. There's a lot more detail and kind of the individual stats that are in the survey, but that's kind of the high level perspective. The market is developing, and it's come a long way from a racial perspective, but a lot more change is needed on gender.
Yeah, thanks, Rory, for that. And as Rory says, we've got a short space of time here, so we can't go through all the detail around the survey as well as the index. And there's a lot of information in the document which you are welcome to download directly from our website or contact us to engage on the document. So the DEI index has been long in the making, and as I said earlier, it's a reflection of what's been going on in the sector, but also taking our cue from internationally recognized frameworks such as the 2X Challenge to ensure relevance and applicability of any kind of benchmarking we do in the DEI space. And again, a lot of the international frameworks we always struggle with because they tend to focus largely on global economies that are very different to ours. And so we needed to bring something that represented the local environment and practices whilst aligning with the internationally recognized frameworks. And the relevance of this index is critically important because, one, it provides a very easy and standardized method for asset managers to evaluate the DEI performance, and secondly, for investors to screen potential asset managers based on DEI criteria. And beyond being a measurement tool, as I mentioned earlier, in the same way as our B.Economics survey started acting as a catalyst for transformative change, fostering awareness, transparency, accountability, industry improvement, all of those good things, we believe that the launch of this benchmarking tool will provide evidence around reinforcing the idea that more diverse teams deliver better financial performance. And, something that we didn't touch during this talk or elaborate on extensively is the countless amount of work, that empirical evidence that has consistently demonstrated that very diverse teams tend to deliver better investment performance. And that's one of the things we took very strongly into consideration when we were designing the framework for this index, was to say, well, are we promoting for 100% Black teams? Are we calling for 100% women-owned, women-managed teams? And that is not what we are doing. In fact, teams that had that profile were in fact scored lower than teams that had a better diverse profile, because we believe in the power of cognitive diversity, where diverse thoughts generate better ideas and hence allows you to make better decisions. So overall, the index consists of 5 key dimensions. When we talk about ownership, we talk about ensuring that historically marginalized groups have an economic interest in the economy. So that's where ownership comes from. Representation, we are focusing on leadership diversity with this criterion. Here, we really want to evaluate the presence of diverse people within key roles, boards of directors, C-suite positions, key investment decision-making positions, and ensuring diverse perspectives at the highest level of decision making, both as at an executive level as well as at an investment management level. On the equity side, and this is where I struggled with a little bit when we looked at everything, was really about the promotion of equal compensation, career progression, retention of staff, hiring of people, fostering, culture, those things that you can't exactly put a tangible kind of hand on, but fostering an environment where people feel like they have the opportunity to succeed and reach their ambitions and goals whilst generating value for all stakeholders. On the impact side, what we looked at was in your ESG, in asset managers' ESG practices, do they actively engage with portfolio companies, whether it's on the listed side or on the unlisted side, with regards to active stewardship activity, encouraging discussion around whether it's through proxy voting or having management discussions, but also the growth of concepts such as gender lens investing, supporting businesses that promote diversity in the economy and improve the lives of previously disenfranchised people. If we look at the policies and governance side, and this is where we had the most fun, as I said earlier, we evaluate over 350 policies where we looked for the implementation and practical examples around the implementation of policies with regards to executive, career progression, pay equity, sexual harassment, discrimination against people on gender, race, ethnicity. One of the areas that we've picked up in the industry is that women sometimes face severe sexual harassment prejudices from not only people within the businesses they work in, but also sometimes from clients, and how do we deal with those kind of issues. So the scoring methodology, it's very transparent. The entire methodology is spelled out very clearly in the document. The framework that we've used is you scored out of 100, 40 points goes towards understanding Black representation when it comes to ownership, decision-making roles, equity and impact, as I described those dimensions earlier, and that we do for both Black people and for women, and those two represent 40% and 40%, and then the last 20% really speaks to policies and governance, where we evaluate your care and leave policies. I mean, some people don't even, some asset management firms didn't even have clear policies for maternity leave and for parental leave when you have a baby. They don't have clear policies around non-discrimination, around career advancement, around the procurement of services from businesses. So that was what we evaluated in that component. And then all of the, I've just realized that my camera's off. All of those scores were then evaluated and averaged so that we can give you an overall perspective of where you are positioned within the overall industry, but as well as your overall score. And you can see that if you're a large asset manager and a small asset manager and a mid-tier asset manager, you could achieve a very, very high score or very low score. It wasn't as if, larger asset managers would score better than smaller asset managers. So what we decided to do was we broke it up within AUM buckets, and you can see that we've got the AUM bucket that's above 100 billion rands. We've got the AUM bucket between 30 and 100 billion rands, the AUM bucket between 10 and 30 billion billion rands, and the AUM bucket less than 10 billion rands. And of course, some managers did phenomenally well, and we need to congratulate those managers who have excelled and demonstrated excellence when it comes to culture, the integration of DI practices within their businesses. And you see that coming through the performance of their investment portfolios as well, which perhaps may be seeing, there may be some kind of alignment and correlation when it comes to that. And that's a study that we can definitely kind of build on into the future. But the graph on the right-hand side is the overall scores achieved for every single one of the 93 asset managers that participated in the survey. If we move on to some of the key findings, so ownership, very strong Black ownership across the industry. The industry has done phenomenally well when it comes to Black ownership. We're going to have 5 minutes left for Q&A, but let me just wrap up quickly. The phenomenal demonstration of Black ownership across the entire industry, poor representation of women ownership, very good equity scores. There's a few gaps when it comes to retention of staff and pay gaps, etc. Very poor scores when it comes to the representation of women, and Rory spoke about it for private markets, but basically it's an overall industry challenge where women are not advancing to decision-making roles, so people need to build on that. It also seems that from an engagement perspective, companies spend more time on financial metrics as opposed to metrics related to DEI. So on the stewardship side, some managers scored well, some didn't. And then, of course, on the total AUM side, managers scored well when it came to diverse teams, but not as well, particularly when it came to the participation of women on those teams. And then it was very kind of average around where the overall industry scored around policies. Of course, some excelled and did phenomenally well. And those that did phenomenally well within each of the buckets, Old Mutual Investment Group came out top of the pile within the bracket above 100 billion rands, followed by Terebinth Capital, who's done exceptionally well within their category. Perpetua did very good in their category, and a smaller asset manager in the private market space demonstrated excellence in their category.